Thank you very much, Stunya. While we're busy getting the microphones in place, let me start perhaps by introducing my team. To start with, all protocol, as was previously observed, is hereby observed. I also want to add at least a special mention to the Italian and Spanish representative and member of the Diplomatic Corps, Mr. Guido Giachetti. Today's theme is on the BSC as a gateway to raising capital. And our discussion, at least at the very beginning, is to set the foundation for that, to speak really about the economic environment. We basically are saying that as companies come about, as companies build themselves into significant entities, you must first get, or at least get an understanding of the economic environment that you're in. So it's very important as part of the gateway, and it allows us to be able to set the theme, firstly for developing companies in Botswana, and then secondly as well to allow for that expansion out of Botswana into the Pan-African environment. So today's list of panelists, I'm pleased to say, has experience and knowledge that covers not only our local markets, but the Pan-African markets as well as the global economic sphere. Let me start then by introducing them. I think I'll start from closest to myself. Today joined by Mr. Gardner Rosicky. Mr. Rosicky is with Standard & Poor's. He's a sovereign ratings analyst, so would like to hear quite a bit from him. Next to him is Chris Becker. Chris Becker is with Investec, and he's also the Africa research analyst. And the next two, and let me start with Mr. Sibabuli. I'm particularly pleased to introduce these two because they represent, I think, a phenomena that we've seen over the last few years where the younger generation is coming in and bringing the energy into research and into the financial practicing, if you are to call it that. Maturi is, I would like to think of him as the leading economic research analyst in Botswana. He is currently studying for his PhD, so I expect that I'm probably one of the last people to call him Mr. Sibabuli. Next time he's here, he'll be Dr. Sibabuli. He is, next to him then is Remo Khetsi. I've had the pleasure of working with him in the banking sector. His experience covers basically all of the major banks in Botswana. And not only that, but even in that environment, he's had the experience from the perspective of SMEs to business banking, as well as leading the banking approach to the larger corporates. So with that, I'd like to welcome the panelists on behalf of the audience. Today, last night I was with them and we discussed quite a bit about today's session. But today I'm not with them, I'm part of the audience, and mine is to lead today's discussion. The approach is first to discuss the recent changes and macroeconomic developments in the global scale, particularly anchoring on how that then affects the Botswana businesses and any prospects that we might want to be putting out there. And with that, I'll ask Chris and Gardner to help us with.
Thanks, Kupana. So we're not just going to, I think we'll just have a discussion on the chairs. I hope I'm clear, everyone can hear me. Good morning, all. And thank you for the privilege of addressing this audience. It's nice to be up in Botswana. I think Stacey's kind of led us into some of the global economic backdrop with Chinese growth slowing down, the impact that that's had on commodities, the uncertainty and the politics in America, as well as the rise of populism in Europe. And I think we're all quite familiar with some of these themes, so I don't want to elaborate too much on that. But I will say I do, for Investec Bank, through our stockbroking business, I interact a lot with global institutional investors around the world. And the mood has certainly changed towards Africa. So people have been quite negative, and markets have been extremely tough, and it's been difficult for investors, especially on the public side, to make money and generate returns in the African environment in the last few years. But the clients that I'm speaking with are getting the sense that we are approaching a bottom, and that some of the worst, at least in terms of Africa and other emerging markets, is behind us. I think the trouble is no one has high conviction in terms of the global macro environment and the political dynamics and the way things are going to be going for the next few years. So with low conviction in terms of what's going on globally, and despite people being a bit more upbeat around the outlook in Africa, we're not seeing big capital inflows into African public investment markets, both bonds and equities. So I think that's what's currently withholding a recovery in African macroeconomic dynamics. So yeah, I would say that's kind of where I'm seeing things.
Gardner, that change in mood, how is that translating into the mechanics of ratings and information flow?
Thank you very much. I think to start off, most of my experience is in a number of African countries. I think predominantly or more broadly, we can say that a number of African countries are dependent on commodities. Most of the fiscal revenues, most of the export revenues are dependent on commodities. And the change in the commodity prices in the last few years has impacted negatively on African countries. These changes come from supply side and demand side. Supply side probably is the old story because of excess supply, and that's coming from the US story on shale gas and so forth. But we have probably a recent agreement on OPEC, which has helped oil prices to stabilize, and probably oil prices have bottomed and are improving around the 50 range, right? Which is a good story for the likes of Angola, for the likes of Nigeria. And if we look at the diamonds have also been under pressure, the prices, because of a demand story. A demand story from China, a demand story from the US, a demand story from India. So what we do is credit rating. So a number of credit ratings have come under pressure because of these changes, which impacts the borrowing ability of a number of African countries. But I think going ahead, what we see is perhaps there would be some improvements, but ratings are not going to improve that quickly. So, I mean, the previous speaker was talking about raising finance in the capital markets. Raising finance in the capital markets also goes hand in hand with credit ratings. And I think for most of our coverage in Africa has been mainly on the sovereign basis, which is mostly countries, and not so much on the banks, not so much on the companies, right? That's probably because as part of the developing process, when companies grow, they get to a stage where they want to be assessed, where they want investors, external investors, to assess. They want to provide information, they want to be more transparent, and that helps the culture of developing credit ratings. So I think it's a process that goes ahead, and I think into 2017, we are likely to see improvements that will help a number of countries in Africa, and consequently, it feeds onto the domestic banking system and the corporate sector.
But the two speakers have spoken about the bottoming of sentiment. Commodity prices are also, if we are to believe the speakers, are also bottoming out, and there's a lack of ratings appetite from the corporate perspective, but the nationals are picking up on that sentiment. How does that translate into our local environment, and what effect does that have?
Good morning. Obviously, as Botswana is a small economy in the grand scheme of things, we fear of these developments that are coming out. So very key for Botswana is the fact that commodity prices are bottoming out, and Botswana is a commodity-dependent economy, obviously, will get to benefit from that in three forms. From a growth perspective, we know Mining does contribute significantly to GDP in your 17 to 20% ranges. So a recovery in commodity prices, which then results in some improved production levels for mining, then will mean from a GDP perspective, growth will feed through. The second one is on revenue collections. If you look at the fact that, again, your minerals contribute on average 30 to 35 to fiscal revenue, then a recovery in commodity prices and a recovery in mining production on the backdrop of what's happening in the demand pickup in the US, et cetera, then means we are collecting more than we otherwise would have done in the past few years. So again, that's another benefit. And the third one, again, if you now look away from the growth from a GDP perspective, but look at export concentration to say from a current account perspective, how much more are we doing in terms of exports versus imports? So when there's that pickup in demand, then it means, and from an export perspective, again, we are exporting more, both in dollar terms as well as in volumes, which again then feeds a more positive number. So the net effect of it is what we have seen from the budget presented in February, a recovery in commodities and increased mining activity. Essentially what you have is you collecting a bit more, so you are now narrowing otherwise a budget that was increasing, because we're tracking ESP locally, we're tracking NDP 11 that's coming. Those are expenditure pressures. So it then gives a relief from a collection perspective when mining is doing better. But it's a give and take. We are net importers of fuel. We saw what happened this weekend. Fuel prices have increased. The direction is essentially if you have other commodities being the likes of fuel and you're an importer on that perspective, you might import some of the inflation as a result. But in line with the expectation of growth coming in Botswana, we will feed off those positives, and we should see, again, Botswana returning to positive territory as well.
Yes, what I'm hearing is generally a positive story going forward. And what we really are here to discuss in detail is the opportunities for growth of direction. What's your take on the sectors for which there's opportunity for the SMEs, given what we've just had around the turnaround of nations and also general economic shift?
Okay. Good morning. Like Pickup said earlier on, my experience is with the banking sector. I've been involved in credit analysis from the SME end all the way up to large corporates as well as global corporates. So in terms of the insight I'll be giving is based on first-hand experience from the clients that we interact with on a day-to-day basis. So in terms of opportunities, His Excellency earlier on did allude to some of them. Technology, there's already been groundwork that has been done in the form of Botswana Innovation Hub and the form of Bofinet and the cable that has been put in place to enable quicker connectivity. So innovations around that area and opportunities do exist. Another point, looking at the recent budget speech, is to speak to the developmental budget. Two key areas which have been given the top allocations within minerals and water resources, which are areas that are going to get a lot of focus going forward. The Northwest grid is an area where there could be opportunities for electrical contractors, as well as construction people within that sector. North-South Carrier 2, another opportunity. A lot of construction and water resource capability companies can play in that sphere. The recurrent budget has also shown a growth of 6.2%. And in that regard, a lot of SMEs who do deal with various parastatals and local authorities can tap into that growth and be able to provide services as they see fit across board. I would also just want to comment on a point that I picked up from Stacey's point in terms of linkages between the stock exchange and commercial banks, in the sense that when SMEs do end up listing in the stock exchange, they get a credit vetting in a way, they're given a rating. So when they do end up coming to the commercial banks, they're able to we were able to have a better credit view, not only just based on non-financial factors or the financials that they do have, which in most cases are not usually up to speed.
So maybe just to come in, one very important point that I did not mention in my remarks is that Botswana is the highest rated country in Africa, right? The credit rating for Botswana is A-. Outside Botswana, it's probably only South Africa that is in the investment grade. Most of the ratings in Africa are in the non-investment grade, and particularly in the single B range, right, according to our global scale. So that means that if there is a culture, companies want to borrow, want to issue, especially issuances outside the domestic market, in the international markets, there is already a high bar that's been set at the country level. Some of the analysis starts from the country level, then it drills down to the sector and to the company specifics. But the starting point is already at a much higher level.
If I can also just add in here, with the institutional public investor clients, specifically on the equity side, that I interact with on an almost daily basis, there's such a dearth of new listings and opportunity in Africa at the moment for them to invest in. And because there's so much turmoil, because many African countries, especially some of the bigger capital market countries, haven't allowed their economies to diversify to a sufficient extent away from commodities and resources. And with commodities and resources being under so much pressure, money being trapped in some of these countries, big currency pressure, and all these issues coming to the fore, people are really looking for good, exciting new stories in Africa, new listings. I mean, there's huge demand for it from an institutional investor space. And so I would say, even despite the political uncertainty and some of the dynamics that's going on in the world, if we had to see some of these listings actually materialize, you'd see significant interest in appetite.
Yeah. Now, I hear from you that basically you're saying Botswana as a nation, at least from a credit rating perspective, which then speaks to cost of funding and access to funding, the base is high. It's a better than average place to start from. But having started, then what are the opportunities going into Africa? We've seen companies, the listed companies, let's say RDC, Choppies, Sefalana, just to name a few, that have taken a Pan-African approach. But those are now the larger sort of businesses. Maybe 10, 15 years ago, they probably were the businesses that we'll be talking to now. So speaking to the smaller size, the SME size business today, what do you see as being the economic key opportunities and risks coming out of Botswana and going into the rest of Africa?
Okay, maybe I can start on that. I think in our experiences, we have seen companies that decide to leave their homes because perhaps the competition has become much tougher in the domestic market or as expansion plans. So most of the observations are probably for companies that are in the retail space, as you've mentioned, Choppies, a number of South African companies in the retail space, in the financial services, in the telecommunications, in the mining sectors. So the question is around what are you chasing? If you are chasing a large market, then maybe Nigeria is the place because of large population. Maybe Ethiopia is the place because of large population and low cost of labor. But it's very important to understand that which countries the companies go into, because there are a number of elements that come into assessing country risk, right? So some companies, or especially some of the South African companies, have probably done well in some of the African countries, but also have found it difficult because the environment, the cost of doing business is much more different. Part of that is a story that comes from regulation or government policy framework and the ease of processing permits and a number of things. So one could think of a number of countries, perhaps one of the countries that's probably been in the forefront in reducing ease of doing business is probably Rwanda, right? But Rwanda is not a country with strong or big commodities that they can sell. It's simply a country that's placing itself as a services center, right? And establishing business is probably something that can be processed within a day, within a few days, right? So those are some of the steps that can be seen. So it's very important when moving out of the domestic market to understand which country to go to, what sectors, and what are the factors that drive that, and then an enabling policy environment.
Yeah, and then for Africa again, remember this is a $6 trillion industry, $6 trillion industry. You're talking billions of people in terms of the population within the continent. So opportunities, like Gardner was saying, are much varied. But what's key from an economic standpoint and what will affect Africa in the current and probably the next few years is the major themes, again, that are still feeding from a global perspective and how that is translating into the outlook for the region. So the first one, obviously, we know we cannot ignore Trump in a way and the sentiment that has sent for the entire market, including Africa. I'll simply, in an analogy, compare Trump to Dineo. She gave us water in a matter of days, but she ruined our roads, our bridges, etc. So there's a good and the bad from Dineo. Same as with Trump. So this is key from a factor of we have a global theme of deglobalization and protectionism that's feeding in. It has an impact on Africa and what they're likely to do or react. It's protectionism in the fact that you then have an Africa differentiation value. Your risk premium is that you are fearful that there will be a lot of protectionism and it will hurt your trade. That's a premium, that's a risk premium. But on the other side, you have a discount of what if the growth materializes and you benefit as Africa. So the starting point then of that Trump and the protectionism that is coming not just from Trump, but also from Brexit and other exits that will likely come, will definitely have an effect on trade. So the question is, will that come at a premium for Africa from a risk perspective, or would it come at a discount where we actually will see pockets of opportunities opening up? So that's, I think that's the first that's also coming in. The second one is on rising nationalization. And it's very linked to protectionism. A more inward-looking America. What does it mean for geopolitical tensions, and what does it mean for geopolitical volatility in that regard? Should there be increased defense spending for areas where there might be challenges, so you are fighting wars in the Middle East? What does that then mean for our prices, and what does it mean for our price producers and importers within Africa? The third one, again, in there is the increased US financial conditions. We know now we're talking a probability of maybe 3 or even more hikes from the States. Definitely means the dollar might get stronger. It has an impact on African economies and their currencies, the rand and other volatile currencies. And therefore, what do they then do to protect their own local economies and safeguard their local economies against these variables? If you group all together, what we then have at the end of the day is a realization that in Africa you've got your investment-led economies, your North African economies. You've got your commodity-led economies, Botswana included in there. But what we have seen since 2012 is that your investment-led economies have actually led the growth within Africa. Your commodity-led have suffered as a result of what we have seen. So essentially, when you're looking into Africa, then you realize you've got two dynamics, but they all point to the same thing. Africa needs infrastructure development, it needs industrialization at the end of the day. So that opens pockets of opportunities. As an SMME expanding to Africa, you look into where the future of Africa lies. It's not in commodities, it's definitely in investments, but within that you need infrastructure, you need industrialization. So that's where you now pick the pockets, like Gardner was saying, as you look at the outlook for African investments.
So in short, in this environment of protectionism and isolation, as well as you mentioned, the deglobalization, what would your advice be to an SME business whose strategy depends upon, at some point, going out into, going out into Africa, just for ease of language? What would be your approach in terms of what should they be on the lookout for? Is it advisable, or should we first see this commodity turn and see what its effects are going to be, see how far the protectionism is going to go? What's your thinking in that space?
Okay.
Okay. Well, I think Gardner pointed out earlier in terms of the areas that you look for, whether you're looking for market, and as well as you have to look at factors of the ease of doing business in the areas that you are going into, and also look at, of course, the policy formulations that exist within that market and how such policy formulations are encouraging economic growth. So those are the areas that will be given as advice to SMEs to look out for to expand into Africa. And maybe if I could just bring it back home in terms of also stealing a few points from what His Excellency had mentioned around the ease of doing business within the Botswana market. I mean, historically, we have seen a stable political environment, and we are recovering from a contraction in 2015 and forecasting growth going forward. But based again on market sentiment, there has been a perception which I think His Excellency dismissed quite well, perception that issues of work permits renewal do take quite a bit of time, and this can cause a bit of, lack of a better word, uncertainty for FDI and investors. So His Excellency has given quite a bit of clarity on that, and in the budget speech as well, there has been a mention on the same issue by the Minister as top priority to ensure that such conditions are made conducive for economic development.
I'd like to share my perspective also on this, what Kasecha was talking about with regards to deglobalization and the rise of protectionism and all these issues. I think with the Trump administration and their underlying foreign policy philosophy or ideology, whatever you want to call it, I think it's important that we distinguish between economic globalization on the one hand and political globalization on the other. I think what's important here is in economic globalization, we have the division of labor, free trade amongst individuals and businesses with each other all over the world, specialization, leveraging competitive advantages, and all these good things that make individuals and individual countries unique. My sense is Trump and his administration is not against that per se. In fact, they're very much in favor of that. What they are against, clearly though, after with his first executive order in office, he cut the Trans-Pacific Partnership Agreement, the TPP. He's also rallying against the World Trade Organization and how certain structures are set up in it. Political globalization, in other words, is what he's against. And what political globalization is to create central global political bodies that make decisions around how resources are allocated and how trade functions around the world. Firstly, I would say political globalization is what one could call transnationalism, which is different to internationalism. And that's kind of the distinction. So you can still be international, you can still trade, you can still do business and invest and do all these things. But on a transnational level, you're starting to create political bodies that make decisions on behalf of people, but those bodies are unelected. So for example, that's what Europeans are kicking back against. That's why the European Union is beginning to break up. So that's where I see the revolt and the populist movement going. I don't think it's necessarily bad for Africa. In fact, I think this is really good for Africa because African governments have not been particularly, this is my sense and interpretation, have not been particularly well represented in terms of getting the needs and requirements and policies that would benefit us into these global committees. So I think this was a unique and really good opportunity for countries who have put really good policies in place, running balanced budgets with low debts, good business environments, in order to go and strike bilateral agreements with the American government, for example, and European administrations.
Well, thanks for that. It's a positive note on which to end the initial discussion. I've been advised that there's been a change in the schedule of events, mainly due to the timing constraints. So we'll have the question and answer session for this set of panelists after our tea break.